Hi, this is Amin, a California-based registered investment advisor. Here's what shaped the markets for the week ending September 19th. The biggest story was the Federal Reserve's decision to cut interest rates by 1/4 of a point, bringing the target range to just over 4%. This was the first cut of 2025 after months of holding steady. The move came in response to a weaker job market, slower hiring, and a small uptick in unemployment, despite inflation still running above the Fed's 2% goal. For now, the Fed appears more worried about protecting jobs than fighting inflation. Chair Powell emphasized that future decisions will be made meeting by meeting, depending on incoming data. The Fed's projections suggest 2 more interest rate cuts this year, of about 0.5 percentage point, though that's not a promise. Lower rates could help support growth by making borrowing cheaper, especially in housing, but the central bank is trying to strike a tricky balance between a slowing labor market and persistent inflation. The second major story was TikTok. After months of uncertainty, there was real progress toward a deal that would shift U.S. ownership of the app away from its Chinese parent, ByteDance. Treasury Secretary Scott Bessent announced that a framework agreement had been reached in trade talks with China. Under the current plan, U.S. investors, including Oracle and private equity firms, would take a majority stake in TikTok's U.S. business, while ByteDance keeps a minority share. The key breakthrough was Beijing's willingness to allow TikTok's recommendation algorithm to be licensed to the U.S.-led company, something it had previously resisted. To give talks more time, President Trump extended the divestment deadline to December 16th, postponing the threat of a ban. If completed, the deal would keep TikTok available to its 170 million U.S. users, though they may eventually be shifted to a U.S.-controlled version of the app. Critics remain cautious, especially over the algorithm, with some in Congress insisting there should be no shared control. Politically, the deal shows a delicate balancing act, Trump taking a tough stance on China while mindful of TikTok's popularity, and Beijing weighing the importance of its technology against broader trade relations. Whether this becomes a model for regulating foreign tech, or just another flashpoint in U.S.-China tensions, will depend on the final details. Looking ahead, next week brings housing data, including new and existing home sales, which should give a better read on the housing market after a challenging year of high interest rates. We'll also hear from Costco, providing another glimpse into consumer sentiment and behavior. One more note, today marks triple witching, which happens 4 times a year when stock options, index and index futures all expire on the same day. This typically drives up trading volume and can spark bigger market swings, especially in the final hour, the so-called witching hour. For professional traders, it's a high-stakes day of adjusting positions that can move prices suddenly. Historically, markets have sometimes struggled in the week after triple witching, with the S&P 500 averaging about a 1% loss in the subsequent week. That pattern isn't guaranteed, but it highlights the risks and opportunities that come with the seasonal spike in volatility. That's it for this week. Let's see what the next week brings. Here's to hoping for the best, but being positioned and ready for all possible outcomes. Stay prepared, and as always, look for the next update next Friday. If you found this helpful, please follow or subscribe and share it with others who might benefit. Thanks for listening, and happy investing.